Good day everyone, welcome back to Fighters Trading Channel. Back again with another weekly flows analysis video where we are going to take a look at what happened in the markets during this past week and potentially what we can see in the coming week. Today is the 23rd of March 2025. It is a Sunday and our analysis will be for the week of the 24th of March moving forward. So without further ado, let's get into it. Starting with NAS 100. On the weekly time frame, we can see this previous week closed with a spinning top formation. So very much what we saw during the week was consolidation, and for that reason we do have the spinning top formation. We can see the major bullish trend line on the weekly time frame, which is still very much intact and is currently being tested. The spinning top formation on top of that bullish trend line does indicate that we could potentially be seeing a shift in direction. However, we will have to wait for market directionality to be confirmed during the week, see how that week closes, and then potentially from there we could see a shift toward the bulls, or we could see further downside at play. Just taking a look at the indicators, we can see the 50 moving average price is currently broken below, looks to be retesting at the moment. So right now it's not providing us with any strong indication. However, we have the RSI below 50 between 30, which is a very bearish indication. Now, although we have a very bearish indication, we do have the bullish trend line. So we have two bearish confluences, one bullish confluence. Thus, we are still waiting to confirm whether the bulls will take control. But right now, as it stands on the higher time frame, the bears are still very much in control. We still also need to acknowledge that we've had 4 bearish closing weeks, and it's been very strong movements. In the past, we also had strong bearish weeks, followed by a bullish signal, which indicated that the bulls were stepping back into the market. We have yet to see confirmation that the bulls are stepping in, and thus we will have to trade accordingly. Moving into the daily time frame, we can see the daily time frame, as expected, is showing us consolidative nature. Markets going up, coming back down, having a bit of resistance here at 19,850, with support at 19,150. Market still in that consolidative phase. No market directionality is yet to be confirmed. We could potentially see the bulls or the bears stepping in and actually moving this market with momentum. So from a daily time frame, we can see that it is in a bit of flux right now. But if we were to indicate from the higher time frame, which showed 2 bearish confluences, and from the daily time frame, we can see that price has broken below the 50 moving average very early on, and it is trading very much below that 50 moving average. On the RSI for the daily, we are trading between 50 and 30, which is another bearish confluence. So overall, the bears are very much in control on both the weekly and the daily time frame. Should we see a shift, we will trade accordingly, but right now the bears are very much in control, and we could potentially still be looking for short positions. Lastly, we take a look at the 4-hour, which shows very strong consolidative nature. Thus, no market directionality can be confirmed on the 4-hour. However, how we would confirm if the bulls or the bears are taking control? If we see a break above the 19,850 level or 19,880 level, break above, retest, and a push higher, we can then confirm that the bulls have taken at least short-term control and start looking for longs. However, if we see a retest of this resistance level, a push down and a break below 19,150, then we can confirm that the bears are still very much in control and continue running with the short positions. Again, we have a broad range consolidation on the 4-hour, and what we can do is trade consolidation. It's broad. We have about, I would like to say, 730 pips between the two levels, about 73 pips, 73 points. Thus, trading that, we can trade from the resistance down to the support and vice versa, from support back up to resistance, until we see a clean break. That is a very viable trading option for the week ahead. So that is NAS 100. Let's move on to US 30. On US 30, we can see the weekly time frame is showing us a bullish trend line, very bullish in nature. We do have another trend line here that has been broken, another bullish trend line that has been broken. But for the most part, the major trend line is still very much intact. In fact, I just want to refine it a little bit. The bullish trend line is still very much intact. Taking a look at the indicators on the weekly, we can see that price is sitting upon that 50 moving average at the moment, with the RSI trading below 50. This does indicate a bearish confluence here, with the moving average still yet to be confirmed. So we have one bullish indicator with the bullish trend line, one bearish indicator with the RSI, and an indecision with the moving average. Coming into the daily time frame, just to look at the indicators first, we see price trading below the 50 moving average, which is a bearish confluence. We have the RSI below 50 between 30, another bearish confluence, and we have a bearish trend line currently at play. The reason why is we see the break of the secondary bullish trend line, but on the daily, I would say that is the main trend line right now. So we have a break of the daily bullish trend line, and we have a clear bullish market at play. It's a little bit hard to kind of draw a trend line right now because the points on the daily aren't refined with the pullbacks. It was just a really strong bearish move right now. So with that being said, on the daily time frame, we have the RSI that's bearish, the moving average which is bearish, the break of the bullish trend line, that's another bearish confluence, as well as the bearish trend line. So that is 4 bearish indicators. We could potentially be seeing a break and retest here at the 42,000 level. Price broke below and is currently on a retracement to the upside, and we are seeing a lot of indecision on this daily time frame. We're seeing a spinning top formation, a doji, and we have a hanging man, but it is like a doji hanging man, where price started, price ended. So it will be a very interesting week ahead. Market directionality is still to be confirmed, and we will have to wait for the markets to open to determine. On the 4-hour time frame, still showing consolidative, I would say bullish consolidative nature. Markets are making higher lows, however, stuck with very minimal higher highs. This is why I indicate the bullish consolidative nature. We can see that a support level has formed at 41,400 with the resistance at that 42,000 level. Now, a break above 42,000 for me would indicate that the bulls have taken control. A break below 41,400 would indicate the bears are still very much in control, and I would trade accordingly. So this coming week, I'd have to wait for Monday to open, see what the markets are confirming per each session, and trade accordingly from there. It does very much depend on which session is the strongest and brings the most volume into the market, that we will determine which market we will trade for the week ahead. Looking at gold, we can see gold is still very much bullish in nature and is still very much in those overextended regions. We have RSI divergence on the weekly time frame. You can see the overextended nature here on the 21st of October 24, and then we move back into the overextended region for the 17th of February 2025. Markets are continuing to make highs despite the overextended nature of the market. We see the bullish confluences on both the RSI and the 50 moving average, with price trading above on the weekly. On the daily time frame, we have a strong bullish trend line, which is still very much intact. We see the markets are in that overextended region, currently retracing back between the 50 and the 70 bullish zone, with the price trading above the 50 MA. Now, markets could potentially still push up, but I would like to see a deeper retracement towards the trend line, actually towards the 50 on the RSI, potentially not so close to the 50 MA because we can see that price has been trading very far away from it. But if I at least see two confluences towards a trend line retest, potentially retesting 2954 and towards the 50 on the RSI on the dollar, I would be more confident to start taking long positions. On the 4-hour chart, we can see a break of the support level at 3028, which could indicate the bears are stepping into the market in the short term, and we could be seeing a drop towards that major trend line. We have broken out of this bullish channel, which we can now delete. We are testing the 50 MA on the 4-hour channel, and we are at 50 on the RSI. I still feel this pair has further to go, but we could see a push up before we see a further push down. I am looking for shorts in this coming week. I think that the shorting market, the bears are stepping in, where we're going to see a lot of profit taking and a lot of liquidity grabs as the price moves down in this market. Euro USD, very much consolidated nature on the weekly time frame. You can see the break below, then the break back within, and it was a strong bullish push during that week of the 3rd of March. It is our final week of trading for March, so let's make sure that we actually do end it in profits and we actually make something good. This has been a very tough month to trade. Looking at the weekly again, we can see that the MA isn't really providing us with any indication as markets are breaking in, breaking back below, breaking in, and we're currently looking like we have a very bearish turn right here. On the RSI, we can see a break above 50, which is a bullish confluence. Taking a look at the daily, markets moved into that overextended region. We had RSI divergence and the markets did turn around. We can see that it is moving very bearish at the moment, and we could continue to see bears in the market. Looking at the 50 moving average, price is definitely trading above that 50 moving average, but it's trading far beyond. We could see a correction towards that 50 before a further push up. There's very low momentum on that bearish move on the 4-hour time frame. We can see, although we have a break of the 50 moving average and the RSI is below 50, between 30, the momentum still needs to kick in for the bears. However, higher time frame indicate bullish nature, whereas the 4-hour time frame indicates bearish. So on the lower time frames, we could be looking for short positions all the way down for this liquidity grab to 1.052. We are still waiting for the market to actually acknowledge and add momentum and volume so that we can trade this to the short side. I could potentially be looking for shorts this week, seeing as though we do have a bearish trend line at play here. And I would be very comfortable looking for shorts if this level is cleanly broken, retested, and keeps pushing down. I think that would be fantastic. Euro JPY, weekly is still very much consolidated. We can see that on the weekly time frame, we closed with a very bearish pin bar signal. You can see it spiked to the top and then closed below. So it could be an indicator that shorts are at play here. We could also see, even during the week, we saw the break and retest of that bullish trend line that I just deleted. But we also saw that the resistance level, price broke above and then broke back within. So it could be an indicator that this resistance level is still very much valid. And we could potentially be seeing shorts stepping into the market. Per the indicators that we can see that the RSI is bullish, trading above 50 and 17 on the daily, and we have broken above the 50 MA. So two indicators indicating that the bulls are still in control. But this is a very strong evening star candlestick pattern upon the bearish resistance trend line, and we could potentially be seeing shorts here. We can also note the resistance level here at 164.60 and further push downs from the side of the market. On the 4-hour time frame, I would say very consolidative at the moment, finding support at 160.8. with the lower high created at 162.03. So again, waiting for the markets to open, seeing how the markets react to the bearish trend line, the bearish resistance trend line. And as we get a better indicator of how the sessions are reacting to this pair, we can then figure out the market directionality accordingly. USD JPY, very bullish on the weekly time frame. We can see we're trading below 50 on the RSI. We're trading below 50 on the RSI, and price is below the 50 moving average. We also have a very strong bearish trend line. So per the weekly time frame, the bears are in control. On the daily time frame, we can see that the bearish channel is still very much validated. We can see a break of the bullish trend line. On the RSI, we can see price is still below 50, between 30, which is another bearish confluence, with price trading below the 50 moving average. So we have four strong bearish confluences still very much at play here. Although we are seeing bulls stepping into the market from a higher time frame, the bears are in control, and we would keep looking for shorts. So on this market, with the retracement that we can currently see, I'm going to start looking for shorts off this bearish resistance trend line. Just to have a gander at the higher time frames on the other pairs, we can see that Bitcoin is still very much in that bearish channel, trading below the 50 moving average, and is below 50 on the RSI. We could potentially be seeing shorts in the market despite the bullish retracement that we just had. CHF JPY, it's a very choppy market at the moment, although we are seeing bulls stepping in, and we're seeing this break and retest level at 168.52 and a bullish RSI signal. I still don't have enough confluence to say that the bulls are stepping into the market, so we will have to wait and see what happens here. Per the dollar index, we could be seeing a turnaround in the dollar, perhaps a retest of 106.84, which is a very strong retest level, and we would be collecting all this liquidity here. But the markets are still bearish on a higher term time frame. We could just be seeing a short-term retracement of the market. So we would have to look at all dollar markets accordingly. Euro index, also potential turnaround, collection of liquidity down to 105.12, but this could just be a short-term retracement before a push up, which is expected seeing where the dollar is right now. Yen has been a surprising one. I still think yen has space to push further up. So pushing up with the dollar, maintaining a steady bullish channel is interesting. So we could still see yen strength stepping into this market with dollar strength, which would be an interesting indication. So that is the main pairs which we've analyzed. I think let's have a look at the news ahead and see what we can expect for this week. So very strong news week, starting straight out of the gate on Monday. We have strong euro news with French and German PMI. We have pound PMI as well as USD PMI. So all PMI is being dropped 24th of March, Monday. Depending on the trading sessions, that's when those sessions will be dropped. So London session for euro and German as well as pound. And then during the USD New York trading session, we have the USD news. We have more pound news on Wednesday, and then on Thursday we have final GDP and unemployment claims. On Friday we have core PCE price index, and so Monday is a very strong technical day. I think Monday will create the tone for the week that we are following in terms of market directionality. So just to recap this month of March, I think it's been very, very volatile, very difficult month to trade. There was not a lot of trend trading, many consolidative factors, and overextended in the gold, creating all-time highs. With the indices continuing to make lows, it's been a very choppy market. Despite the profits that I have made, there's also been a lot of terrible trades. And that just goes to show that trading is a constant learning process. You constantly
have to stick to your guns, you have to stick to your strategy, you have to remove emotions from the space. It was a very emotional trading month for me, especially seeing how choppy the markets were. And it's always good to work on your trading psychology during months like this. I think it's good to take a step back and actually understand how not so untradeable, but how unsustainable long-term trading was in these markets, and that is necessary to shift into different mindsets, such as scalping, when these markets are at play as they are. But nonetheless, we will still do our daily market analysis during the week, potentially also touching on some trading psychology then as well. I hope everybody has a successful trading week. Please note that this is not financial advice, but rather my personal opinions on what's happening in the market. Until next time, I will catch you in the next video. Cheers.